Hello fellow investors, I've screened 20 restaurant stocks in my previous videos. I gave you the best entry prices and my fair values for the stock. This time I'll share with you the only restaurant stocks I'd buy using my own process. First thing I consider when I'm picking and buying stocks is the dividends. I think dividend paying stocks always beat the market. It beats bear markets, recessions, even sideways trading stocks. This is a Warren Buffett style of investing. Rarely does he own stocks without dividends. It's passive income and you can reinvest them if you like. That's how I always look at investing. Buy stocks with high dividend yields, undervalued stocks, and you win the stock market. It has to be around 2% dividend yield and above though. 2% below I'd normally avoid, and obviously no dividends I won't buy except it's a tech stock, growth stock, or something with incredibly strong moat like a Google. Of the 20 restaurant stocks, only 11 stocks I'd consider buying based on their dividend yields. Yum here is 1.9%. I kind of accepted this since it's around 2% anyway. Don't get me wrong, guys, I could still be buying the other stocks for a trade, but long term, I'd always choose stocks with dividends. Second of my process is obviously it has to be trading at a discount based on my metrics. Remember the valuation summary? It has to be around fair values or trading at a discount. The problem with overvalued stocks is, of course, overpaying. A lot of buyers comes with a lot of sellers. I refuse to be a bag holder of any kind of stock. I don't want to overpay for growth. I buy stocks per quarter depending on the numbers they put out, EPS and margin wise. The revenues they report tell me if the business is still strong or going in the right direction. When I'm wrong with my assumptions, I'd happily DCA down. So you only want to buy stocks you're comfortable buying and you're okay DCAing down. Of the 11 stocks remaining, only 4 I'd consider buying. 3 holds and 1 buy. The buy is QSR, RBI brands. The 3 holds are McDonald's, Yum, and Jack stock. From these stocks, only I confirm my bias through the company's fundamentals. To some, one might think my process is reversed or kind of the other way around. Normally, you'd research first about the company, what they do, what their revenue streams are, what countries they operate in, and so on and so forth. For me and my process, if every company claims to be the best company, the best in their fields, then they all must be abide them. I always see to it that I pay the right price for each stock I buy. I always prioritize their financials over their fundamentals. Now, remember my problem with Jack stock, where the EPS is kind of an anomaly. That's why it made it to a hold. I'd be looking closely on this stock. Should you be interested in putting money here? The EPS could just be a one-time anomaly thing, and you might end up paying for an overvalued stock. So you might want to look into Jack stock before buying. Anyway, it's on a hold. I don't recommend you buy now at the current prices, especially Jack. Wait for the confirmation on their EPS in their quarterly earnings because there was a huge jump in EPS from the COVID crash. That's it, fellow investors. If you want to own restaurant stocks, I'd recommend this for McDonald's, Yum, QSR, and Jack. It confirmed my financial analysis. It confirmed my fundamental analysis. So you might want to confirm your fundamentals with these stocks as well. Assess whether you're okay with DCAing on these stocks and whether you really want to own these stocks long term. That's my take on these 20 stocks. See you guys on my next video.